What is a silver price short squeeze? Why does it matter? You've probably heard the term. If you already know the term, I'm going to give a brief explanation for those who potentially don't know the term and why it matters for the silver price in particular. And then we'll get to live price analysis of gold, platinum, and all the other stuff that we do. Let's get straight into it. This is the silver price. In US dollars, $52.30. We are at brand new all-time highs. So it's important to talk what is a silver price short squeeze, what's a short squeeze in general. So let's get straight to it. I'm going to do a little bit of grokking for you as well, and then we'll come back to this chart and have a look. But as you can see very clearly, we are at new all-time highs. We've broken that $50 level. We had that massive $50 party that we did live. And this is important. So let's go to here. Let's ask Grok here. Explain in simple terms what a silver short squeeze is. Okay, and get your comments in, etc. Let's go to the screen and me, I think is a good idea. All right, here we go. A silver short squeeze happens when the price of silver rises quickly because traders who bet on the price falling, they're betting on the price going down, are forced to buy silver to cover their losses, pushing the price even higher. Let me read that again, then I'll break that down into two separate parts. A silver short squeeze happens when the price of silver rises quickly because traders who bet on the price going down are forced to buy silver to cover their losses, which then pushes the price even higher. So you've got the term short squeeze. We'll take the word silver out of there, short squeeze. So what is a short? A short is a bet that the price of something will go down. So let's just take it down to say maybe the daily time frame, for example. If you go long on something, you are betting that it is going to go up. Now, here's the thing. You can go long with just the money that you have. Let's say you have $5,000 to invest in silver and you go, okay, you saw it down here at lower prices. You went, okay, I'm going to go long. I'm just going to I'm going to bet that the price is going to go up. No, you buy your $5,000 of silver. Is that physical silver? Is it a silver ETF? Is it silver mining stocks? Whatever it is. That's it. You've just bought. You haven't had to borrow any money, or you decided not to borrow any money to get into that position. So you have bought at spot price. You're just trading the spot price. Okay. Now, if the price happens to, for some reason, price go up and price go down. If you bought in here and then for some reason the price is down for a while, let's say you did it, all the way, say back here. Actually, let's say you did it back here in 2011, for example. You would have been holding for a long time. Or let's just say you did it here instead. That's probably better. Let's say you bought up here. You thought, oh, wow, we're going to go back to 50. And then you bought at this kind of $29, $30 mark, right? So you bought on spot price thinking it's going to go higher, but then it starts going down. You're like, that's no good. Here's the problem. Here's the good thing. You as a spot holder, you can just hold. And as the price is going down, nothing's affecting you from a financial perspective in terms of, except for, your investment is down for the moment, but you're buying for the longer term. So you're happy. There might come a point where some people will get shaken out. Maybe people got shaken out here at about $22. You're like, oh, I hate this game. It sucks. But if you're a long-term holder, you're like, no, this is the bottom down here. I bought here. Oh, well, I'll just wait till it goes higher. That's fine. As this is going down, nothing's happening. You haven't lost anything. You've just still got your silver and you're completely fine. Cool. You didn't borrow money. Now, if you had have borrowed money to buy more than you could actually afford, that's when you'd be getting into some trouble. So you would have gone long on leverage. You would have borrowed money. Okay. And then as the price is going down, it's getting to an area which the bank says, hey, you borrowed money. The price of your asset is way down low now. Like, you're going to have to give us more collateral, because what happens if this thing goes down forever? We want our money back. Okay. So you're going to have to cover, you're going to have to buy more, or you're going to have to, give us more collateral. Okay. Makes sense. Good. So that's on the long side, but on the long side, you can just buy and hold, not worry about it. Here's the problem. On the short side, you basically got to borrow some money. Now, as people go short, let's say, and this is why it's so amazing right now for the silver price, and that's why we're seeing the silver price, one of the reasons why the silver price not stalling at this $50 mark. Why? Well, let's say, for example, you are someone who was a person who shorted, or you're a large institution, you're a large bank, etc., and you saw the writing was on the wall back in 2011. You saw silver go right up. And it's like, this thing is really overextended. I think it's a double top. I'm going to short the market. I'm going to bet that it's going down. Okay, so you've bet that it's going down. Fantastic. So you've popped your entry price in here. Technically, what you're doing is you're borrowing money to sell silver here. What you're hoping that it does is that it goes down and down and down, and then you'll buy it back at a much lower price, and then you're pocketing the difference. Okay, so you're borrowing to sell, hoping to buy lower. Cool. Here's the problem. What happens if, for some reason, let's say you're in a coma, or you decided not to sell down here, not to buy back down here, you haven't covered your short position, you haven't closed your short position. Now you're seeing the price go higher and higher and higher. Like, uh-oh. I was like, no, it's definitely going to go down. It's going to reject here. I've rejected at $30. That's fine. Now it's going to keep going down. I am a legend. I'm going to make so much money, blah, blah, blah. Oh, okay. Oh, no. No, it's a triple top. Triple tops are a thing. Now it gets to here. Here's the problem now. You're forced to do one of two things. You're either forced to close your position, okay, because as it goes higher than your entry price, you're losing money. Now, huge banks, we're talking JP Morgan, and we're talking HSBC, we're talking Scotiabank, we're talking all these large institutions have massive amounts, or had massive amounts of silver shorts on silver, betting that the price was going to go down. Okay, and obviously they're going to put these silver shorts in different places. Some would have put it, right at the top here, some possibly here, along the way. But as the price creeps higher and higher, what's happening is they're getting squeezed. It means as the price is going higher, they have to do one of two things. They either have to close out the position and basically kind of break even or make a bit of a small loss, or they have to decide, no, I'm going to put more collateral in because I think eventually it will go down below my entry price and I'm still going to make money. Okay, I'm riding this thing for a long time. Here's the squeeze portion of it. Now you're at brand new all-time highs for silver. There is no such thing as once it broke that $49.80 level, $50, there's no such thing as anyone who is in profit in any silver short, whether they bought here in 1980 or whether they bought at the absolute top in 2011. No one's in profit. Everyone, every single one, is now making a loss. So now they have a choice to make. Okay, what do? Do I close my position? And I'm sure there's been plenty who started probably closing their positions up this kind of range. They maybe saw the writing on the wall. They're going, all right, I'm going to lock in some profits. Again, some people would have started shorting here. Okay, very obvious level to short. When you look at it, maybe some like little triple top, something like that. Now it's creeping up in these prices. They've probably gotten out of the market. But the people back here in 2011, all that kind of $50 mark, the price is creeping higher. So they have to do one of two things. As I said, they've got to close the position, or they now have to buy more silver to cover their short. Now, this is where the squeeze happens, because if they have to buy more to keep their position open, well, that's pushing the price higher, which then is getting other people to go, I either need to close my position or I need to buy higher. And as the price is going higher, it's forcing them to buy even more or just take a larger loss. So at some point, okay, this is why you can see once it started creeping above $50, all these banks, all these individuals, they've got to cover their shorts or take their losses, okay? And also they've got probably stop losses in place as well. Now, when you have a stop loss in place, you have an automatic stop loss. So, someone shorted here at $49.80 and they'll go, okay, I don't want to lose a whole bunch of money. What if this thing rips to $60, $70, $80, right? We go, okay, I'm going to put a stop loss in. So the stop loss gets put a little bit above their entry price. So that's around about these kind of levels now. So what the automatic stop loss does is you closes the position. How does it close the position? By buying more silver. This is, again, what drives the price up. So you've got stop losses that have been triggered, making the price go higher. Then you've got people wanting to cover their short positions so they can stay in the game because they think, maybe it'll get up to, this is the psychology of it, maybe it'll get up to $55 and then it'll have a thing. No, maybe it gets up to $60. I'm like, oh my God, I'm losing a lot of money here, but the price can't go up forever. So, okay, well, I'm going to wait till $60, and you know what? I'm going to wait till it gets back to 50, and then I'm going to break even. Yeah? What if that doesn't happen? Okay, so this is the massive short squeeze thing. So let me read it a little bit further here. So here's how it works in simple terms. Okay, short selling. Some traders borrow silver or silver futures contracts and sell it, expecting the price to drop, as we talked about, so they can buy it back cheaper and profit from the difference. Price rises instead. If the silver's price starts rising due to strong demand, and this is the thing, all of these institutional banks in particular have been, as we know, trying to manipulate the price and keep it down. Okay, why are they trying to manipulate the price and keep it down? So it doesn't break the all-time high, so that they don't have to either start losing money or then cover their positions, and which then drives the price higher. Cool. So they've just, for years and years and years, we know this is true. HSBC, JP Morgan, all these big boys. They sell massive amounts of paper silver to try and tamp the price down. Here's the problem. As the price for them, here's the problem for them. Good news for us, problem for them. As the price is going higher and higher, what are people like you and me doing? What is the everyday investor doing? They're going, oh man, silver's nearly back at its all-time high at $50. I don't think triple top's a thing. Look at this. And then you've got people like me. You've got people like Mastering the Markets. You've got all this silver people from back in 2011 going, guys, this isn't a triple top. This is the world's longest cup and handle. It's going to be onwards and upwards from here. Number go up and down, but generally you're looking good. So all that they're listening to us, and the investor demand, as you know, lines outside bullion dealers at the moment. Speak to your local bullion dealer. How busy have they been? Because you, me, and all the newbies coming in are like, the demand is huge. So the big banks tried to tamp it down as much as possible. So the demand now has forced them to cover their shorts. It's driving the price higher. Now, it doesn't mean that the price is going to shoot to the moon. It's just going to be like $1,000. Okay. There will be a natural point where traders will take investment, will take, some profit, short-term profit. There'll be a point where the big banks that are short will just have to capitulate and take the loss. Okay, so we'll come to a bit of a head what that price is before most of the silver shorts are shaking out their positions are closed. We don't know, but at the moment, that's why I think, and many people believe, that's why you're seeing it just currently sail through that $50 mark. Makes sense? Good. Let's see, low supply. So if silver starts rising due to strong demand, i.e. you, me, and every other person, low supply, we're also seeing silver supply shocks as well, or other factors like industrial needs or investor buying. These short sellers start losing money. Forced buying to limit their losses. As we said, short sellers must buy silver to return what they borrowed. This buying adds more demand, driving the price up further. Squeeze effect. As more short sellers rush to buy, the price spikes even faster, squeezing them because they're forced to buy at higher and higher prices. This can create a rapid, dramatic price surge. So we might not even be yet, this is speculation time, we may not even be yet at the point where they're really, really desperate. And actually, let me just go back here. If I were a large silver, if I was a large institution that had massive amounts of silver shorts, if the price is a couple of bucks above, it's like, okay, that's, I'm not going to do it yet. Okay. I think probably the big institutions are probably, they're making a little loss, but they've got so much money and so much capital in reserve that they can cover those quite easily. Okay. And maybe they're not even worrying about it while silver's like, a couple of bucks higher. Okay. Maybe it's like, it'll go down. But the FOMO will kick in, or the FOMO to sell, or the FOMO to cover, or the FOMO to, close their position, will get more desperate and more desperate as the price creeps higher and higher. So could we potentially see a decent spike, which is those people closing their positions or getting out or forcing to buy higher? I don't think we're even at that point yet. That's where, $2.30 above the previous all-time high. Maybe we ain't seen nothing yet. Okay, and of course, I'm very bullish over the longer term. Here's an example. In 2021, social media driven, yes, okay. They did in social media driven Wall Street bets targeted silver, causing a mini squeeze. Okay, short sellers faced losses as prices jumped from $25 to nearly $30 in days due to sudden demand. Okay, why it matters. A short squeeze is more likely when silver supply is tight. Silver supply is really tight at the moment, low COMEX inventories, or lease rates are high. I won't go into silver leasing rates, but they are incredibly high right now. Let's say like recent spikes to 6+%. Well, I think silver lease rates are like 35% at the moment, signaling physical shortages. However, not all price spikes are squeezes. Other factors like blah 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 blah. So I did ask it a couple of extra questions here. I said, is silver supply tight? Yes, says Grok. Silver supply is currently tight as of October 2025, with the market facing persistent global deficits driven by record industrial demand, blah, blah, blah. I asked another question, which was, is there a chart or somewhere that shows the major liquidation zones? No, there isn't. I also asked Grok, which banks hold the largest silver shorts as of October 2005? In the silver futures market, short positions, yes, they're talking about it. The CFTC tracks these via weekly commitments of trader reports, but individual bank names are not disclosed, okay? Largest holders, that seems contradictory, but okay. From the Q2 2005 BPR and historical patterns, the following banks hold the largest silver short positions. Estimates are derived from something, blah, blah, and commitment of trader aggregates. Exact per bank figures aren't public, but these institutions consistently lead. Okay, so JP Morgan Chase, estimated share of commercial shorts, 40 to 50%. Approximate net, they're short net millions of ounces, 150 to 200 million ounces. Apparently, JP Morgan still has in short positions. They're going to have to cover them at some point, aren't they? Unless they're going to try and keep tamping the price down, which doesn't look like it's likely now that we're above the all-time high. HSBC, 20 to 25%, so 80 to 100 million net ounces short. UBS, Deutsche Bank, Scotiabank as well. Let's see. I asked, have any of these banks had to close or cover their positions now that the silver price is above $50? So this is an interesting answer. No, there are no confirmed reports of data as of the 14th of October indicating that JP Morgan, blah, 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 have closed or covered their silver short positions in response to the recent price surge above 50. These banks continue to hold significant net short exposures as reflected in the latest available commitments of trader data as of September. Okay, so that's the report as of September. Now the price is at all-time highs, so we don't have updated data. Okay, why no covering yet? Hedging strategy. These positions are often naked paper shorts used for client hedging or income generation, not pure speculation. Market dynamics, despite the $50 price, suggesting shorts are holding firm. A true squeeze, so we may not even be yet at the true squeeze, would require accelerated physical withdrawals or ETF inflows forcing delivery. Current deficits are pressuring but not yet triggering mass liquidations. Looks like it hasn't happened yet. Potential triggers for future covering. If silver breaks, this is interesting. Grok says if silver breaks $55 to $60 an ounce, key resistance per analysts. I do agree with that 55 to 60, and I'll show you why in a second. Or COMEX eligible stocks drops below 200 million ounces, forced covering could accelerate, potentially adding $5 to $10 per ounce to the price. Okay, good to know. So that is what a silver short squeeze is. It's pretty darn exciting for you and me for the price. It looks like they haven't even started covering their positions. So this just mostly seems like investor demand and maybe some smaller, silver shorters, okay, covering positions, but mainly it seems to stem all around demand. Let me know what you think in the comments right now. That is what a silver short squeeze is and it's why it matters. Ladies and gentlemen, you are watching Good Morning Stackers, where we talk about precious metals. We'll look at the price of camera. I don't want that one. We'll look at the price of gold and silver. We'll take a look at platinum. We'll take a look at the other commodities. We'll take a look at the stock market. Can I just show you very quickly? I'm going to share with you something quickly that you really want to see. Let me show you here. This is a post from David Bird from Mastering the Markets. A massive green day incoming after an amazing day yesterday. What's that talking about? Well, you've got lithium up 8%, uranium up 7%, rare earth metals, because of what's going on with China and Trump and all that, up 14%. This is overnight, by the way. So when the market opens in 7 minutes, which I'm going to take a look at, I think we're going to see a bit of a nice... gold is up 2%, silver is up 4% as well. So I think my portfolio, and possibly many of your portfolios, are going to have a nice little rip in the next 6-7 minutes roughly. We'll take a look at that in a second. So could be a good day. Go back to here, because you know what we haven't done? We haven't done a synchronized slurp. I wanted to get that silver shorting thing out of the way, and I'm really just blowing out the thing here. I'll take that off. That may be a little bit better. Ladies and gentlemen, you are watching Good Morning Stackers with me, Joe Main. I've been a stacker of precious metals since 2010. I've stacked crypto since 2013. And of course, as I turn the light off, the light goes awful. Whatever, bro. And join me now for a synchronized slurp. We do it roughly at the start of every live show. Going out live on X and on YouTube right now. This is where you grab a tasty beverage. I've got mine. You've got yours. Tell me what you're slurping in the comments, and the rule is you must do it audibly. It's the slurp heard around the world. Ready? 3, 2, 1, go. Great to see so many people. Let's do some quick shout outs here. Hit the big red subscribe button, as I said. Can you also do me a favor? Do me a favor, bro. I want the screen and me. I want this one. Do me a favor. Head over to x.com/it's Joe Main. Why would I want you to do that? Well, follow me over there. Look at that, 3,995 followers. That's pretty darn good, isn't it? I have over 2,500, 2,600 on YouTube as well. I just wanted to get this done. I always do this so I can get a little bit trendy on the Xing. Cool? Cool. All right, head over there for me, please, and thanks. Let's go back to here and go back to here. And I've got to say a massive hello to all my subscribers. Did you know the show is brought to you by Perth Bullion Exchange, perthbullion.com.au, Mastering the Markets, masteringthemarkets.com, stormrake.com, full-service cryptocurrency brokerage, and also my Silver Investor Club. We'll talk about that later too. Morning, everyone, says Still Ruger. Still Ruger. Did you change your name, Still Ruger? Gerald, good to see you. Good morning, Stackers. Good morning, everyone. Says Silent Stacker. Morning, Joe. Morning, Jason. It's good to see you. Morning, Bullionaires. It kind of feels like that way at the moment, doesn't it? Brian Kerr said, bought 20 ounces on Saturday. Congratulations, my friend. It's interesting today. We're not getting, in my feed here, I'm not getting the first, last, and I'm just getting your usernames. That's interesting. How many of those banks attended the Cybos conference in Frankfurt, Germany? Gerald, I don't even know what that is. That's how uneducated I am. Can you please educate me on what that is? Thank you. You go, Joe. I shall go. What I'm finding, there's a time change, not for me, but for you guys, because now it's Australian Eastern Daylight Savings Time. So I'm doing the show at my normal time, but for some of you, it's an hour earlier. So in Queensland, it's an hour earlier. In Western Australia, it's like 6:30 in the morning when I start the show. So maybe that's why there's a few less watchers today. Actually, I've got 99 people watching. Okay, just none of you want to participate. Okay, sure. Participate by joining us in the live chat. Let's go to gold price. We'll take a look at platinum, etc. Then we're going to take a look at some Bitcoin and some crypto. Did everyone see my interview with the amazing, let me see if I can find it, the amazing Cushy? Cushy, what an absolute legend she is. Let me just show you here. I'll find it here. Good morning, stackers. There we go. Where am I? Oh, I'm right there, Joe. There we go. Let me show you the amazing Cushy. What a legend she was. We talked about the real reason behind the Bitcoin and crypto crash. Are you going to do it? So I have to watch my own ads. Is that not my own ads, but I have to watch ads on my thing? Go away. There she is. Right here. Let me share the screen. Where are we? Screen and Joe. There she is, the amazing Kushi Malhotra from Stormrake, stormrake.com. There is, again, they're a full-service cryptocurrency brokerage. And we spoke about the real reason behind the Bitcoin and crypto crash, why it crashed, etc. I gave my opinion, and then we looked at the chart as well. And then Kushi jumped on around about the 16 and a half minute mark. She jumped on as well and gave her opinion. Absolute legend over there at Stormrake. She's one of the senior brokers there. So go check out that. You can also find it on X as well as an individual interview right there. So go over to my X channel, x.com/it's Joe Main. Let's take a look at the gold price. That's not the one I wanted. Silver is at $52.37. Oh my God. Let's start with silver. No, we've done silver. It's at $52. Here's silver price. Here's the silver price. It's $52.37. Is there anything else you need to know? We're now in new all-time highs. Shorts haven't even really started getting squeezed yet, according to the reports I just looked at. I think it's onwards and upwards from here. I wanted to talk about that $55, $60 area. That's actually what I'll do. Remember, I just spoke about that. We talked about it the other day. It's actually based on the line graph. Okay, what's a line graph? A line graph takes the closes only. So when I go back here, look at this. See the bar chart? You'll be able to see the spikes. Okay, if we do that, let's go to the monthly. And you'll see the spikes to 50, right? The spikes to 50, but then we put it on a line graph. Oh, so candles. Candles, you see the spikes, and then we put it on a line graph and see those shorten out a bit. And then we have this particular, on silver, this trend line, which has yet to be broken. And it's right here, roughly there-ish. So actually getting up to that mark, and that mark's around about $55. When you take a look at a line graph on the gold chart, I won't show you again, but it did stall on its line graph on the monthly chart. So it stalled at the trend line on the monthly line graph chart. Okay, so this is the monthly line graph chart for silver, and we're coming up to that area. It's around about 55, 56 kind of dollars. So 55 to 60 is what those what Grok said is apparently the analysts are saying is a possible resistance. I would agree with that potential 55, where you could, round about there, maybe come back and test that 50 or even a little bit less. And then once you break that uptrend line, well, you see what gold did. Gold did the same thing, high in 1980, high in 2011, stalled at the line graph trend line, okay, uptrend line. And then when it broke through, it's just been going great guns since then. It hasn't come back to test that at all. So watch out for that 55, 60 kind of mark coming up for silver. Cool. That's all I'll do for silver. It's just looking absolutely damn amazing. Let's take a look at gold. Here is gold on the line graph. Let me put it on the candle chart. Gold on the monthly time frame, priced in USD. My God, this is $4,113. We're at new all-time highs for gold as well. As we have been saying, just be wary. Actually, what is that? That's the line graph chart. Yeah, see that one before? That's that line graph where it had that little kind of pause there. So I think a similar thing might happen for silver. Nothing, history doesn't repeat though. Let's see the candle chart. Let's get rid of that. Looking great. Again, we're just in the sort of last throes of a particular wave. Okay, so we're seeing all-time highs, great, but it can't go up forever. Let's pop on the indicators. And we're extremely overvalued on the daily time frame. Not really actually seeing much bearish divergence at the moment, or not really seeing any bearish divergence on the daily time frame just yet. Okay, so on the daily, because you're getting higher highs and higher highs. So higher highs on the price, and actually it's just kind of ramping up a little bit. Okay, it has higher highs on the daily. However, we have gone into extremely overvalued. And if we start ticking over here, this is then where I will go, okay, this could be the high for a little bit, okay, and what goes up must come down, so don't be stressed if you do have some lower prices coming. We'll talk about what those are When we find the high price, when we find the tick over, it starts pivoting at the high price, then we'll talk about, what the low prices could be. The thing I'll just get you to watch out for is right here. If I pop you on the 4-hour, you'll see it higher high here. So far a lower high here. If I show on the 4-hour, that'll be playing out for sure. Yeah, it is. So higher high, lower high, and the fact on the daily we've already sort of tipped over, that's probably looking good. I say it every time, but there's even more evidence to say it's looking good around about this $4,100, $4,200 mark for gold. So it is coming. We are going to see a dip. Could it be from here? Could be. Silver, though, I think has got, when we take a look at the gold to silver ratio, okay, silver's got way more to go. Again, don't forget, gold goes first, has its massive run, silver follows, and it lags behind quite a bit. Here's the gold to silver ratio. We've cracked through that area that I said we need to crack through. Below here confirms long-term silver dominance. We're below it, man. I'd like to see us close, some weeks below, etc. And we've got another little area to watch out for. As this number goes up, gold's outperforming silver. As this number goes down, silver's outperforming gold. And when the gold to silver ratio, when you see silver spiking, this is just for all the newbies, when you see silver really spiking, you see the gold to silver ratio absolutely tank. It went as low as 1 to 32 or 32 to 1 back in the silver peak of 2011. We're only back at 80 and we've just broken the all-time high in the silver price. You've got a lot of ways to go to even get back into the normal range. So silver can massively outperform gold over the next bunch of months. I did have that 80.5 level that says below here, silver will just continue its dominance. There is an uptrend line just to battle as well. So yeah, do watch out for that uptrend line. So maybe quite likely you're going to see some support here. So gold probably might take center stage at around about that 77.5 mark. But while we're below this purple box area, you could have a move up to there, and when you break that, then you've got the silver's final trapdoor. That's at about 72, and then you'll get into the normal range. It's looking great for silver, short answer. You know it, I know it, we all know it. That is silver and gold to silver ratio. We've done gold. Let's take a look at the platinum price, the dark horse. Here is platinum on the monthly time frame. Price in USD 1,643. Where did we find resistance? Almost so far we found resistance pretty much so far bang on that $1,700 mark. We technically went up to 1,687. Pretty close enough for Jazz. Area of a cluster of resistance there. It's going to become resistance a little bit again. Over the longer term, it's looking absolutely fantastic. It will break the all-time high. Could we find a little bit of resistance around here? Let's go to the weekly, see how we're looking on the indicators. Let me do that. Okay, relative strength index looks like we might be getting into some kind of double toppiness. Okay, so just bear that in mind. Higher highs, equal highs, but nothing's confirmed yet. It's not until you start making pivot points and you start, come up to a high here, and then you start making a few successive lower days, lower weeks, because we're on the weekly. You'd have to have like 3 weeks in a row of red in order to say that this here is the pivot. And then you can go, okay, higher high from the pivots and then equal or lower highs. Then you can say bearish divergence. We haven't even done that yet. We need 3 weeks consecutively of lower prices in order to say that's the pivot point. So this could continue just to creep up. And of course, I'm incredibly bullish on the longer term. Let me go back to the daily. Daily's looking a little bit more sort of momentum lossy, if that's a word again. Higher highs, equal or lower highs. Okay, so, and we're at that $1,700, $1,700 key Fibonacci there. So just watch out around about here, but over the long term, we're going to break the all-time high, and we're probably going to shoot through to, at least up to that $5,000 mark. We're at least going to double the previous all-time high. So once we get to 2,300 US dollars, I can see a move easily eventually to post $5,000. Okay, so do with that what you will. Okay. I will talk quickly about palladium. No, I won't talk about palladium. I'll do that in a different show. Let's talk about copper. Okay, copper's looking really good at the moment. Here's copper, $5.20. We're nearing that level I need to see us get out of. And where did we find basically exact resistance at? At the top end of the zag zone right here from this high and this low. That's at that $5.30 mark. Once you crack through there, it's just looking fantastic. We'll get to new all-time highs, and copper looking great. That was not meant to be that. It was meant to be a chef's kiss. Look like a Snoop Dogg kind of move. Looking great. Okay, short answer is bullish on copper over the longer term. Just got to get through that $5.30 mark and watch your copper miners and all your miners go crazy. Speaking of, let me take a look at what the market is open now. We'll take a quick look at what the market has. Holy crap, you can't see what I'm looking at. Wow, I've opened, whoa, that's a lot. Okay, cool. We've just seen a massive move. Okay, my portfolio is up a lot. It was up a lot yesterday. It's up a lot today. Is that that's like $4,000 up, I think, something like that. Not bad for the open of the day. Let's take a look here. I'll show you. I'll put you on the screen so you can see my stuff. Where would that be? Just the screen and me. Screen and Joe. So you see on the right hand side here, this is all my stuff. Okay, everything listed in a yellow mark is something that I am in currently. So what I'll do, let's have a little look here. We're going to go like this. We'll do it by that, and then we'll do it by that, and then we're going to see what's up, what's opened up for me today, and for potentially you too, because you might be in a lot of different stuff that I'm in too. So let's see, okay. Let's quickly go through it. It'll take 2 seconds. On the daily time frame, so this is ARR, American Rare Earths. Rare Earths doing really well. So ARR is up 22%, opened 22% higher, roughly. IXR has gapped up for the day. That is up 15%, and we're 9 minutes into the day. That's rare earths as well, ionic rare earths. NNE, this is something that had a move overnight. This is nanonuclear energy. That's been up 19% overnight. AW1, American West Metals, is up 14%. NVA, Nova Minerals Limited, that's up 8%. NVX, which is to do with lithium, that's Novonix Limited, that's up 11%. ARD, which is Argent Minerals, which is a silver mining stock, has just broken. ARD has just broken finally. I've been in ARD for ages. Like, I've been holding this thing for a long time, and I was just getting really annoyed with it. It made a play for it then. It's been like a long time, and now it's finally made it through a key resistance zone right there. So it's looking really, really good, and it's through the 618. So this is really powerful move for ARD. I'm not telling you to buy any of this stuff. I'm just telling you that it's a powerful move. So the fact that, let me show you why. From this high and this low, you've got the expected resistance range. We talk about that. That's called the zag zone. You can call it whatever you want. And that is between the 0.386 and the, where are we, dude? The 0.386 and the 0.618. So it's between this zone right there. I'm going to put that in a different color so you can just see a little bit better. Let's call it green. Cool. So it's through that zone. So what has ARD done? Okay, it's gone through, see this horizontal line, horizontal rectangle? That is a key support and resistance area. So it's broken key support. The resistance has now been broken through. Tick number 1. It's broken through the zag zone. So if you come up into the normal resistance zone and then fall back out, that's bad news. That's not good. However, if you come up to it, test it as resistance, find a support, and then crack through it, tick number 2. You're also through this downtrend line as well, which is kind of hovering around the 618 in that zag zone right there. Now it's through that that downtrend line, tick number 3. Now I've got into ARD lower down in here, so I'm up on my position, but now this is really solid. Now this tells me I don't need to manage this anymore, pretty much. Okay, as long as it closes the month above that 3.6 cent area, I can just let this ride and let it ride for as long as I want, okay? And I'll let it ride until it tells me otherwise. So that's looking good. ARD, SBSW, Sibanye Stillwater, Platinum Miner, coming up to resistance here. It's kind of been faffing around at resistance, so do watch that. It found a top at around about $12.30 US dollars, and it's just kind of mucking around there. So we might be finding some momentum loss on SBSW. You got higher high and a lower high in the relative strength index. The volume is good though, so that's the only thing that could tell me you could break through that resistance. If you do, looking really good. SS1 is on the daily time frame. SS1 Sun Silver is up 5% for the day. I have a cannabis stock, that's not doing much. FLG is up 6%, that's Flagship Minerals. We've got Future Metals, CHN, which is to do with platinum, PLS, which is to do with lithium. Let's see. Okay, there are the major ones, and uranium's up as well. I won't go through all of them. Some of them are down. Okay, Basin Energy. Ooh, I'm up on my position, but it looks like I'll hold it. Pod, which is platinum. Pod is lithium. Sorry. And a few others. So that's the market's open good for the day. Most of my stuff is up because I'm in all the commodities. The commodity, I'm either in indexes or I'm in specific miners as well. So I hope your portfolio is up today. Looking good, hey? Let's take a look at, we'll go to crypto, but then also, before we go to crypto, when you want to buy physical precious metals, buy from Perth Bullion Exchange, perthbullion.com.au. Why? Best bullion dealer in all of Australia. Get free shipping when you have 20 or more items in your shopping cart. That's it. perthbullion.com.au. They also price match as well. I know so many people who've been taking advantage of the Perth Bullion Exchange specials that are listed only on the Silver Investor Club. So I'll quickly tell you about that. If you want extra specials on Silver Bullion, which you cannot get anywhere else because it's a private club and it's also private specials. You need a password and all this kind of stuff. There's hoops you got to get through. You have to be a member of the Silver Investor Club. Why would you want to be a member of the Silver Investor Club? Because it's a like-minded community of silver investors in physical silver and silver-related assets. We talk about stocks, mining stocks. We talk about spot price. We talk about physical silver, etc. And you can join for free currently. I will start charging you eventually, but get in while it's free and enjoy it. And then if I prove it's worth to you, then you want to pay the small amount that I'll charge per month. But 208 members can't be wrong. We do a private live stream every single Friday morning, and that's where we do the Silver Bullion special for that week. Okay, to give you an example of the Silver Bullion special, and I'll tell you what, you can still take advantage of it right now if you join. Okay, let me tell you what that special is. Instead of doing a password or whatever, you can actually get $2 off per ounce for any 1 or 2 ounce silver on the Perth Bullion Exchange website. So literally, go to the silver section, anything right now, if you're a member of the Silver Investor Club, okay? And don't be that person who just joins and then leaves, okay? Don't be that guy, okay? Because that's just rude. But any 1 ounce or 2 ounce silver, you're getting $2 off per ounce. That includes buyback silver as well, which is already a really good price. Right, you're getting $2 off per ounce, or if you want to buy 5 or 10 ounce or 1 kilo silver, you get it for $1 off per ounce. Yes, that's right. So if you buy a 10 ounce bar of silver on the website at the moment, you can get $10 off the bar because you're a member of the Silver Investor Club. Now, what will happen is you go to order the normal way, and then you pop in the order notes your username on the Silver Investor Club. Very easy to find. You can find it here. Your username is kind of under there. It's very easy to find. To copy and paste it in the order notes section of the Perth Bullion Exchange website, and then they'll apply that discount afterwards. And they'll resend you the invoice, and then you've got an amazing silver special. And of course, you also join because of the amazing community, all the posts that we do, the live stream hangouts. We talk about all our private silver investee stuff. Okay, there's stuff that we don't talk about on here that we talk about on there. Cool. Silver Investor Club. Let's go to crypto. This portion of the show is brought to you by Stormrake. Stormrake.com, full service cryptocurrency brokerage. Get 2% brokerage fees for life when you sign up with my account. Cool. Let's take a look at Bitcoin. Where are we? Where are we after the massive crash? Massive. And the altcoins just went absolutely blue. Let's take a look. Here is Bitcoin. Here's Bitcoin on the daily time frame price in USD, 115,500. All right, we're kind of hovering around that 115 mark. We haven't seen a massive gain in the last 24 hours, but we haven't seen a massive dip. That's good. Okay, as you all know, the big crash happened. We talked about that. I talked about the real reason. If you don't want to watch that video, the real reason, I think, is the BTC whale is an OG whale from 2011. There is no doubt in my mind, although I don't have proof, that of course a 2011 OG Bitcoin whale is going to either going to have a large crypto exchange, Binance, CZ, whoever, right, is either going to be the owner or is going to be affiliated easily. If you're an OG crypto BTC whale from 2011, you know the people who run the exchanges, you have an exchange yourself and all that kind of stuff, okay? You're in with the crowd, okay? So I think a big Bitcoin whale in cahoots with the major large exchanges wanted one last flush out. Why would they want one last flush out? Because they want to get everyone on the opposite side of the market. They want to grab that liquidity. Remember how we talked about short sellers before in silver? People who went short here stood to make an absolute crap ton of money if the price had have continued tanking, right? So what do the exchanges do? They go, I don't want to pay out millions of dollars. I'm going to force them to close their positions by going up to here. Haha. So these people here who went short sucked in, okay? Then what they do is they go, before we let the price run, all these people here, these people went long. They've gone long on leverage, okay, all the altcoins, etc. So they go, well, we're not going to let the shorters win, but screw you, people who went long. We're not going to let you win either. So we're going to drive the price down. That's why I'm absolutely sure the BTC whale in cahoots with the exchanges went, we're going to do one last flush out for all the people who bought Bitcoin down in here, thinking that we were going to pay you out gajillions of dollars, as we let the price go higher, because they do let the price go higher. They're the big whales, okay? One last little flush out. So now that's flushed them out too. So you get them, you flush them out on the high side, you flush them out on the low side, and this is called, in technical terms, I think this is called an expanded leading flat or an expanded flat, where instead of the market doing something like this, where it goes like an ABC correction, it does an ABC correction going sideways. So A, B, grab the stop losses up here, C, grab the stop losses down here, and then continue the trend. So on balance of probability, I think the trend continues for Bitcoin. That's my short answer. I think this is most likely that expanded flat. Grab the stop losses here, grab everyone's money, okay? And of course, on the altcoins, grab everyone. Like, it just wiped people out. Why? So they don't have to pay out later on down the track. Get them all out, and then onwards and upwards we go. I think that's the most likely scenario for Bitcoin. What do we need to see in order to say, okay, that is the case? It's very, very simple. Let me get rid of all this for you. All we need to see, for me, is the price creep higher than, get out of the zag zone. And that's still at that roughly that 118 mark. Okay, see there? That's actually quite simple. Interesting how that all lines up, isn't it? So, see that previous resistance there? Okay, we came down, we broke through it, again, grabbed people's stop losses, and then it broke through there, and then that's all I need to see it do. Get it back through that, we'll call it 119,000 actually, because technically it's between the 0.386 and the 0.618, and that's sitting at 118,500. Call it 119,000. Can we do that? 118,500. That's where I need to see it. Get and hold through, and then I'll say, okay, this was the expanded flat. This was them shaking out the market, and now they're just letting the price rip. Okay, so if you do something like that, I will say new all-time high coming for Bitcoin, and I'll say sky's the limit. We don't know. Could it be $200,000 Bitcoin before the end of the cycle? If we do the following and we reject anywhere in this box and then we fall out of this box, then you go, oh, okay, maybe it wasn't, maybe investor confidence has been shaken so much that they're like, no, the cycle's over. So that could still be the case. So just watch out for no lower than around about 114,000. You don't want to see sort of holding below there. Okay, if it starts doing that and rejects it, yeah, then we will talk about lower prices, but we're not there yet. We're just in a holding pattern at the moment, bit of a trading range. Let me know your thoughts about Bitcoin. Let's take a look at altcoins. And then we'll take a look at some individual altcoins, and then I've got to get out of here because you do too. This is Good Morning Stackers. Oh, wow, we're at 280 billion. Ah, interesting. Okay, here is others. The altcoin market minus the top 10, 280 billion. Once again, I've said it on a previous video, but my absolute sympathies go out to, and by the way, I'm counting myself lucky because I could have been one of those people, and I actually have been one of those people previously. So I know how it feels to get liquidated when you didn't think you'd get liquidated. You never thought the price could get down to the level that you thought it would never get down to, and then it does, and they shake you out. Why? That exact same reason. They shake everyone out because they don't want to pay out millions, billions of dollars when the price goes through an absolute crypto alt season, right? They want to shake you out first, so then they don't have to pay out. Cool. Unfortunately, that did that. You had that massive liquidity grab down here, all the way down to 156 billion. It's basically wiped every single person out, unless you've been holding crypto since 2022 and you haven't sold and you haven't gotten in, you haven't been trading, you've just held it down here. Well, congratulations to you. Well done. But I don't know many people who'd still be holding here and they haven't sold back here and tried to buy back in. So most people are out, man. But look, we're at 280 billion. That's good. You're right at previous resistance. So it took 48 hours, 72 hours? Something like that, to go from absolute carnage to back to previous support. Now that support, you don't want to see that as resistance. It's acting as resistance at the moment, right? And you can see here very clearly. So if I take it, do some Fibonacci. I have to take this Fibonacci from this high and this low. This is how sucky it is. Look at that high and that low. Now here's the positive. The power of Fibonacci. Where's the 0.786? Once again. Let me get rid of you. Did it again. What is going on? Honestly. Come on, TradingView sucks. Okay. All right. That's how you pick a bottom. This is how you pick a bottom. That's how you pick a bottom. Okay. No one could have picked it. Okay. Just bear in mind, it's all hindsight. But look at that. If you had no one would have picked it. But I just find it interesting where from that high and that low, there's your previous level of support that got broken, and then we saw the massive move down below that 280. Remember, we talked about 280 clearly a long, long time ago. Look at this 280 level, right? Look at that 280. That was the level. I've spoken about it a million times before. If you crack through 280, you'll see a massive move. Well, we saw that massive move. And where does that sit at? Oh, gee, what do you know? The 0.786 Fibonacci from this high and this low, and that's where we're finding resistance at. So the short answer is, the good news is you're through the zag zone, but it didn't take much to get through there. So now you need that to be respected. Okay, so respect 250 billion. And, gee, what do you know on the daily time frame? Where did we close that massive carnage day at? At the $250 billion mark, which is closed exactly at the top end of the zag zone. So this, to me, seems pretty good. It seems good. It seems like it could be over. And of course, what do we say about big spikes? I mean, it's a very unfortunate spike, but it does say that the buyers were much more in control of the market. It's hard to, how could the buyers not be in control of the market if, a lot of people had stink bids at like 50 cent SUI or, 60 cent render or whatever it is, or your altcoins, everyone got wiped out. A bunch of people got their stink bids. Okay. Short answer is, but you've got to get over and stay over 280 billion. That's it. And of course, for any kind of altcoin run, the kicker is right there. 350 billion, right about there-ish. 340 billion, 350 billion. Once you start getting through there again, on good volume, watching the indicators, etc., then we can say, okay, altcoin season. Altcoin season. Just watch out here. You don't want to see that and then fall back into this box, and then I'd start getting a bit concerned. But yeah, at resistance at the moment. But this could be good. Could be good. Just be careful around about here. And for God's sake, do not. If this has taught you anything, don't buy on leverage. Don't borrow money to buy crypto. Okay, don't do it. Just buy spot. Speaking of spot, I do still have my position in. Here is Toshi on the daily time frame, price in USD 00082. I still have my Toshi position. Okay, I got back in here on Toshi at the break through the Zag zone. Okay, it was looking really positive. It was looking really, really positive. And then the thing happened that we didn't expect to happen. Okay, everyone got wiped. Now, here's the great thing with Toshi. Toshi only dropped, I mean, wasn't like 25%, something like that? Let me have a look. From this high, and that's actually not even where the Bitcoin whale and the exchanges did their thing. It was actually not till about here, actually. But you had about a 25% move. It actually held up really well. Toshi didn't break any major support levels. It's gone back into this zone, which I didn't want to see it. Remember that? I said once we broke out through here, if it started getting back into this zone, I'd start being concerned. It's like, well, why aren't they buying here again? Well, one of the big reasons why it's still in this zone is because of the massive dump that we didn't see coming. Okay, so I'm going to give it a little bit of leeway. I'm still in my Toshi position. I just really need to see it get back through that zone there of that 9.5 area. That'll be golden, like really, really good for Toshi. If we start getting back and holding through there, it will be really, really great. Okay, and I'll hold it until, as I've said before, I'll hold it until the market structure tells me. Otherwise, until we start making lower highs and lower lows, I'll be in. I'll ride it to the absolute moon. Okay, it can go as high as you want until it starts doing that kind of pattern. Make a lower high, and then make a lower low, and then I'll get out of the market. But other than that, I'm holding, okay? I will not hold, however, Toshi, if we do start, I'd say closing below that 6.1 level. Now, that might be a decent loss for me, okay? But that is what it is. I will just ride it until, otherwise, look, I'd even look at this uptrend line. Maybe I'd consider the uptrend line there, because that wouldn't be good, and that's actually getting through the 0.5 Fibonacci too. So I'll be concerned at around about 7.1, 7.2, and then I'll be definitely out below that sort of 6.2 kind of level. Cool. That is Toshi, but let's see what happens. It might be in just a little trading range at the moment. Let's hopefully get back over that 9.5 level, but I'm still holding strong for the moment. Let me know what you're doing. Do I have any particular chart requests for crypto? Let's go back. And of course, before we go back, get your chart requests in. And before we go back, do me a favor and do please head over to stormrake.com, full service cryptocurrency brokerage. You can pay 3% brokerage fees if you sign up through stormrake.com. Okay, now that's a great fee, full service. Okay, you just call them like an old school stockbroker. Here's the thing with Stormrake, and let me be very clear. With that interview that I did with Cushy from Stormrake, she confirmed, which I already knew, but she confirmed that Stormrake had no exposure to leverage. They're fine. They deal in spot. They didn't go out of business, okay? Or because their traders were trading on leverage, and then like they didn't do an FTX. Okay, it wasn't an FTX situation, right? They are completely, fully fine because they only trade in spot, okay? Maybe you should only trade in spot too, okay? So do that through Stormrake, stormrake.com, full service cryptocurrency brokerage. Call them, email them, and they'll do it all for you. They can hold the crypto for you, or they can send it to your nominated address. And that you don't have to do anything. You don't have to press any buttons. You just speak to your dedicated broker like Cushy. You can have a chat with her on the phone and just say, hey, Cushy, what's good today? What's the market looking like today? Are you in any particular altcoins? What are your favorite altcoins? She'll just have a good old chat with you. You don't have to buy. You can call and have a chat with Cushy or one of the amazing other brokers there and just get a feel for the market, okay? Maybe you're a newbie to crypto, but you're unsure. Give Cushy a call or anyone else there at Stormrake and, just get their sort of non-financial advice. And then maybe later on down the track, you sign up for an account. But if you do sign up for an account, rather than paying 3% for your brokerage fees, you want to pay 2% for the life of the account. So sign up with my link. I'll put a link somewhere below, or copy, or just type this into the address bar of your favorite browser. It will take you to the sign up page. The sign up page looks like this, but at the top of the address bar, you'll see the words Good Morning Stackers in the address bar, okay, in the URL. When you see that, you know you've gotten it through me, you're signing up through me, and then you'll get 2% brokerage fees for the life of the account. That's a huge saving over time, particularly if you're buying a lot of crypto, particularly if you're selling a lot of crypto. What happens when you're a crypto gajillionaire later on down the track and you got to get out quickly, you want to get out safely, and you don't want to tank your price? You sell with Stormrake, okay? You got to take a 2% hit, but you got to take a hit with everything you do. Do it for 2% instead of 3%. Cool? Stormrake, stormrake.com. Final comments, and we shall get out of here unless we have any particular chart requests. We're already at the 1 hour mark, but let's get through your comments, my wonderful people. That is the best comment I've seen all day. Like and share. Says Niels Han Dynasty. I'm not seeing your regular profile names for some reason. Don't know why. Yo, says Sharky Rich 4844. We have 200 people watching. We've gone through the crypto. We've gone through Toshi and all that stuff. You can also take part on the live chat through X as well. There's a way you can find it. I've had people the live chats come through from X. Yeah, lots of things rebounded. Tau did rebound quite well. GMS says, Caroline, great to see you. Good lithium ETF. That's a great, yes, Jeremy. There is a good lithium ETF, and it is LIT. Let me show you that. LIT would be the lithium ETF to get into. It's listed on the New York Stock Exchange. Let me show you over here. LIT. This would be the one. Yep, Global X, I'll show you right here. This is the one, my friend. I wouldn't worry about any other, I don't know really any other ETFs for lithium. This is the one. LIT, yes, listed on the New York Stock Exchange. You can get exposure to US shares through moomoo.com. I don't have a referral link. You just go to moomoo.com and then you'll see the Australian version. So you can buy US shares through Moomoo here in Australia. And they're very cheap trades too, like $3 trades, really cheap. But yeah, that's the one, LIT, Global X Lithium and Battery Tech ETF. Bear in mind, it's coming up to a key area of resistance around about here. Would have been great, would have been very good for you to get in here, or actually the perfect place to get in would have been right about here on the break of that downtrend line, okay? Well, technically it's actually, the bottom is the best place to get into, but on a break of here was good, on a break of here was good. Just be aware, we're coming into an area of trapped money as such. This is people who got in here, maybe they're looking to get out around about here because they hate the game, they're trying to break even, whatever. And it's just the normal zag zone. So do watch out for resistance around about here. How are we looking on the monthly? On the monthly, RSI is looking good. The volume's looking good. It's nothing. We could shoot through. That's the thing. You got to be aware. You could shoot through this this area here. On the weekly, we're already extremely overvalued. On the daily, yeah, a little bit overvalued already. Lowering volume, so just be wary of that. You could come up to this top end here. You could creep up to here, and this could potentially, I'm only saying potential, right? Could be the potential last little splurts of the gas tank. Then you get some higher highs and then some lower highs on the indicators, so momentum indicator and the volume in particular. So see how the volume's been dropping off. If you start creeping higher on some dropping off volume, then and then you're at this major Fibonacci, major zag zone area. Yeah, you might find some resistance, but over the longer term, I think lithium's just looking great. You will break the all-time high, so it just depends on your timeline. If you are looking to trade it, I'd be wary around here. If you're looking to buy for the long term, just buy and hold. You're fine. Do it now. Non-financial advice. That's lithium. Glad I can answer everyone's questions. Not everyone's, but oh my goodness, Joe. Yeah, I'm not going to read all that. Good morning, says Silver Sushi. Yo, yo, yo. We already did you. Let's see. Is this live? You're going to check the market? I did that, my friend. I went live. I've been live for about an hour or so, and I checked all the precious metals markets in the first half of the show. So you missed all that, but use the time codes on the replay. Let's see. Don't want to do that one. Sweet. Was expecting more live commentary. You're getting all the live commentary, my friend. Have I not been talking my butt off? Let's see. Hello, everyone, says Bill. Good to see you, my friend. All metals, especially copper. Yeah, Asian market is open. Yes. I'm surprised the cannabis stock is not high. Well, I buy low for it to get high later on. Let's see. Oh, Gerald says platinum, lithium, uranium, rare earth metals. Yes, I absolutely agree. Neil was just speaking on his channel on 4 particular stocks. Oh, yes, Clean Air Metals was one of them. Yes, we've looked at that CLRMF. Yes, we have looked at that before. So we're going long. I am so long right now. I'm long in the pants. Chris Crett says on X, people only got liquidated. There you go. People only got liquidated if they had a stop loss. That's not true. But people only got liquidated if they had a stop loss or sold because of fear. I held, so no worries. Well, people trading leverage got liquidated because it went below their liquidation price, so they got liquidated. But if they had a stop loss before the liquidation price, that's a smart thing to do. When you're buying on leverage, don't buy on leverage. But if you ever do, make sure your liquidation price is really low. Not that that really helped anyone in crypto, did it? But also make sure you have a stop loss in place, which is higher, at a reasonable level. They're like, I don't want to get liquidated and lose everything, so I'm going to make a little bit of a loss. You put your stop loss higher. But even then, apparently, according to many, stop losses didn't work. Okay, and I've actually had stop losses not work before in big quick dips. Okay, so it's not foolproof. The only foolproof way is to hold spot price. If you're bullish over the long term, just hold spot in crypto. Don't go leverage. I'm telling you now, I'm probably never going to do it again. And if I do, it would be a very small amount. Okay, very small. I'd probably actually go higher leverage with a smaller amount of collateral rather than a large amount of This is the problem, right? Really smart people go, well, I'm not gonna go use $1,000 and go 50 times leverage because it's really likely I'm gonna lose that $1,000. So what I'll do, smart me, I'm gonna use $50,000. I'm gonna use $20,000 of my own money, and I'm only going to go 2 times long. I'm only going to go 3 times leverage because my liquidation price is so low. It's never getting down to there. And then what happened? Just don't trade on leverage. Let's see. Solana. You want to see Solana? We can do Solana. All right, let's have a quick look at Solana just for Jeremy. Okay. Let's take a quick look at Sol. You can't see this. So why would I show you? Sol, let me show you the screen. Sol, I haven't looked at Sol for a while. This is Sol on the Binance chart. Yeah, it's been a while. Get rid of all that. Yeah, you're at near all-time highs for Sol. You're at $208. I would say that on the monthly time frame, you still have. Well, you had that bearish divergence, which looked like that played out for sure. So that's already fully played out. I just need to see the relative strength that's creep above. It needs to get into overbought in order to say we could creep higher and higher. So yeah, I just be weary. Still be weary for general crypto. That's all I've got to say, really. Just continue to be weary. Okay. Not a lot to say. I think that is it, my funky people, unless we have any other comments. No, you have watched Good Morning Stackers with me, Joe Main, we talked about the silver squeeze. We talked about general precious metals. We did crypto as well and all the other stuff that I do. Ladies and gentlemen, I got to get out of here. You've got stuff to do. I got stuff to do. But the stuff we have to do together is the synchronized slurp. Grab your tasty beverage, whatever you're drinking, and we dance it out at the end of the show. All right, are you ready? Do what you got to do, people. I'm going to put that on there so you can't hear that. Are you ready? Let's dance it out, people, because you have watched. No? You son of a bitch. Let me try that again. Sound effects. Sound effects. Up. You've watched.
Good morning, Stacker.
Oh yeah, we're feeling fine.
Good morning, Stacker.
It's podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do that.
Synchronized slurp.
3, 2, 1, go.
Now we're on the move. Good morning, Stacker.
Great work, people. Love it. Stay safe. Stay informed.
Good morning,
Keep stacking whatever you're stacking. And I will see you next time. Have a great day. Bye.